They're called IRS, Internal Revenue Service rulings. When they become set up by the IRS, they're like mini laws, and basically that's the way it's held up from this point forward. But what I'm here to tell you now is there are 3 revenue rulings that the IRS says are unforeseen circumstances. I want you to find some white space in your margin here, and we're just going to write down the 3 other reasons the IRS lets you sell early. And these will make logical sense to you when I give it to you. Just do it in your margin. Here it is. Number 1, multiple births. Okay, what are they talking about? Twins, triplets, quadruplets. In other words, what's the theory behind this? You need a bigger house. You didn't plan on it, just happened, you need a bigger house. Oh, and by the way, when they wrote this ruling, they were very specific. They said multiple births of human babies. You think anybody said, my dog had a litter, I need a bigger house? Okay. Rule number 2. Death of a spouse. What's the theory here? Can't afford the house, need a smaller house. And then number 3 kind of goes with this, divorce. So number 2 is death of a spouse, number 3 is divorce. Same theory, didn't expect it, it happened, can't afford the house, they'll let you sell early. Okay, so here's what I'm telling you. If you sell in less than 2 years, you pay tax unless the reason you're selling is there was a job transfer, you sold to pay medical bills, there was multiple births in the family, death of a spouse, or divorce. Any other reason that you choose now, or your clients choose, is up in the air. We can't say yes, we can't say no. We just know those 5 are for sure. All right, then following that in your notes, it says the exclusion is unlimited, which simply means you can do it over and over and over again as long as you live in every house for how long? 2 years, yeah.
Do 1031 exchanges not apply to residents?
Right, 1031 exchanges, what you're thinking about, only apply to investment real estate, does not apply to your primary residence or your secondary. Can't be applied to personal residence. Okay? All right, then the next issue number is our senior note. Both spouses must occupy to get the $500,000, but only one spouse needs to own. Yeah?
How do you prove that you occupy?
Well, if the IRS audits you, the way they prove you occupied is you tell them. And if they think something's fishy, they'll look at, were you someplace else for that period of time? By the way, vacation, just because you're on vacation, you still occupy as your primary residence. In other words, you just tell them you've been there for that period of time.
Well, once you get on their bad list, for any reason, you're audited forever.
No, not necessarily. Depends on what it is. Okay? Last point is this, number 3. Any gain over the amount of $500,000 if you're married, $250 if you're single, is taxed at a maximum of 15% if held over 12 months.
So does the accumulation rule only tax one time?
Yes. And some of your clients won't have it because the issue is they only lived in one house. Well, if they lived in one house and we're after that date, they can't accumulate anymore. Because when they sell, they apply the exclusion, they're done, they're starting all over again. The only issue of the accumulation rule is if they had prior houses before that law changed. All right, I want to try to see if you're getting all this. Watch this. Let's say that I'm a single person right now, and I'm going back to this scenario, and here's where I'm at. I bought my house, sold my house, bought my house, sold my house, bought my house, sold my house. I'm living in my $400,000 house now, down here. I'm going to sell, and I've already talked to my accountant who said, Dave, you have $270,000 worth of accumulative gain you've never paid tax on. Since I've lived in this house 2 out of 5 years, I now can sell and not pay tax up to $250. But I'm going to have to pay tax on the balance of $20. Therefore, my tax bill is $3,750. So I just verified everything I just taught you with my accountant. And now I'm talking to you, my realtor. And watch what I say to you. I say this. I hate the idea that I have to pay any income tax at all when I sell my house. Can you help me out? Can you tell me any way at all that I could sell my house and not pay tax and still get the same price for my house?
Yes.
Well, I heard somebody say it. What was that?
Get married.
Get married. When?
Before you sell.
Before I sell. And if I get married, does she have to move in with me?
No.
Yes.
Does she have to occupy? Yes. And how long has she got to live there?
Until you sell it.
1 year.
How long has she got to occupy? 2 out of the last 5 years. So you're telling me this. If I go out right now and get married, she moves in. she lives there for 2 years. By the way, does she have to own the house? No. But she lives there for 2 years. Now, did both of us occupy for 2 out of the last 5 years? Oh, by the way, when she moves in, could I move out? Yes, as long as I've already lived there for 2 years. If she moves in, she could live there for 2 years, and we both occupy for 2 out of 5 years. If we did that, now the exclusion goes from the $250,000 to the $500,000 and wipes out all the